Hi, this is Anshuman, and today I want to teach you about what it means to invest in the stock market. Now imagine you have a friend named Bob. Bob has a lemonade stand. Every single day, he sells $10 of lemonade, and he keeps $5 of that in profit. The rest he spends on lemons and sugar. Now Bob is actually pretty sad, because he has a lot of demand for his lemonade, but he keeps running out of lemonade to sell every day. Now what does he do? He arrives at a bit of a crossroads. A little fork in the road, so to speak. He can either change nothing, keep doing what he's doing, get $5 of lemonade a day, or he can get more money and invest that into the company. Obviously, he goes with the second decision. Now, he arrives at another crossroads. What? A bigger fork in the road this time, though. Why? Because he can either take a loan and pay interest on that loan, or he can sell a share of his company. Now, why would he want to do either of those things? Well, if he takes a loan and he gets $100, he can use that for his company and then pay off his loan later. If he sells a share of his company, which he does end up doing, he doesn't technically have to repay that loan, but he gives ownership of the company to someone else. In this case, we're going to assume you take it. So now you own 10% of the company for $100. Pretty good deal. Well, maybe it isn't. We'll see. With this new money, he gets a bigger jar, a dizzying amount of lemons, and a little bit of sugar. Just a little bit. With all this new stuff, he gets $50 of lemonade a day, every day, and keeps $25 of that in profit. Bob is just rolling in money. Best part is, you get 10% of that profit because you own 10% of the company, because that's how stocks work. With this, we can do a little bit of math and see that it takes 40 days for you to just regain the $100. And so every 40 days from now on, you're going to get $100. Bob's not too happy about giving up $100 every 40 days, but you are, because you're earning passive income. You don't technically have to run this business and you're still getting paid. But wait, there's more. You see, Bob's business isn't just a $5 a day profit shop anymore. It's better than that. It's $25. What does this mean? It means the valuation of the company is going up, of course. Whoa, what's valuation? Don't worry, I'll get to that right now. You see, valuation is nothing more than how much you think a company is worth. How much profit it's going to make, what it's going to be in the future, what are they going to sell in the future. That's all it is. In this case, you thought that Bob's company was worth $1,000 because you gave $100 for 10%, and the other 90% would be $900 because we keep the same proportion. And so we get $1,000 for Bob's company. Now, valuation gets really interesting when another investor tries to come and get the same 10% for another $100. He sees Bob growing and he wants a piece of the pie. So he asks Bob, hey, can I get 10% of your business for $100? Bob says no, immediately. Why? Why would he do that? It's because he's a $25 a day profit now. This means he's worth way more in valuation. So now if you want the same 10%, you're going to have to pay $500. But this means you're rolling in money because you just got $400 without doing anything. The 10% of the company that you bought for just $100 is now worth $400 more. Isn't that crazy? Yes, it is. You're getting passive income. In fact, that $400 that you made on your $100 is called your return. And because you're not technically actively participating in the business, we call it passive income. Now, returns in the real world are usually a bit sluggish, a lot slower. This case we made a bit exciting, but they're still pretty consistent over a long period of time, which means on average, we like to invest in a few good companies and hold on to them. Now, what did we learn in this video? We saw the difference between bank loans and equity. We saw how Bob could have taken a loan and repay it with interest, but he decided to go the equity route instead. We saw the valuation in the stock market and how they can go up really quickly, making the investors quite rich. We saw a little bit of dividends. Wait, I never mentioned dividends. Don't worry, dividends are just the $2.50 that you get every day because Bob is making $25 a day in profit and you get 10% of that. That's all the dividends that are. And in the real world, profits are a bit slower. They're a bit lower. But that's alright. They're more consistent. I hope you enjoyed and learned something about the stock market. Thank you.